In today's video, I want to touch on two companies I personally own and companies and positions that I will continue to increase as long as the stock market keeps these companies, these stocks, under a certain price. These are newer positions in my portfolio. It's Uber and Micron. So let's talk about both of those companies. Let's talk about what has happened with both of those companies in the last couple of days as well. If you enjoy this type of videos, hit all the buttons, like, subscribe, do all of that. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with the company number one here, and that's Micron. Micron still sits under $100. Of course, since the earnings report, we have seen a solid recovery in the stock. We went under $90, and well, the stock since then has rallied up because of various reasons. We're going to touch on the Nvidia aspect in this video, but right now this company has a market cap of $110.6 billion, a forward PE of 12.7 times. The forward PE is so low because, well, this company is expected to grow the bottom line quite rapidly in fiscal 25 and fiscal 26. The analysts currently are expecting that fiscal 27, that's when the, let's say, cycle is going to go back down. I think, and I've been saying this for quite a while now, I think it's still way too early. If we look at the average analyst price target, that sits 32% higher than the price we're at today. For the next quarter, which will be announced late in March because, well, we just got the latest quarter, we also know that this was a big miss. This was a miss by about $1 billion in the revenue. So revenue is expected to be down closer to 9% quarter over quarter, EBITDA down 3.2%, EBIT down 18.3%, EPS on a GAAP basis down 22.7%, and on a non-GAAP closer to 19%. They said that things should be looking much better for the second half of calendar year 2025. If we look at the current pricing metrics, forward PE, EV to EBITDA, price to sales, price to free cash flow, well, price to free cash flow is a bit skewed because this is last 12 months, and in the last 12 months, free cash flow has not always been there, but we're going to look at free cash flow in just a second. Then we got here price earnings to growth that sits at 0.35. Now looking at free cash flow, we can see that for fiscal 25, free cash flow is basically exploding on a year-over-year basis. Then in fiscal 2026, that's expected to grow another 104% year-over-year. And then, as we've seen with revenue and EPS, free cash flow is expected to take a hit according to the analyst. It's projected to go down by 27.3% already in fiscal 2027. But you already get a huge increase in free cash flow in the next 2 fiscal years. Before jumping into the current Nvidia news, I want to go back to September of 2020 during a special call from Nvidia. They already talked there with their work with Micron. They've been working with Micron for the last several years with regards to memory. G5X, they developed with Micron, G6 and G6X as well. So memory speeds are differentiating, and they do allow you to really take full advantage of graphics pipeline in your graphics architecture. And was super excited about working with Micron on G6X. This is from Koifin. There is a link down in the pinned comment if you want to try it out as well, because you can basically do a transcript search and look for whatever you're looking for in any of the special calls, earnings calls, conference calls, you name it. So this is G6 and G5. Now, Nvidia did present, of course, at CES, and they talked about perception AI, generative AI, then agentic AI, and then the last one here is physical AI, self-driving cars, general robotics. Now, what do you think is going to be extremely important in all of those, well, steps, let's say? Memory, of course. Memory, high bandwidth memory, RAM. We've seen this with the newer, let's say, small computer. Well, it's not really a computer, it's basically a miniature supercomputer that you will have on your desk next to your usual computer, because this is basically on a customized Linux-based system, etc., etc. Anyways, here you see as well high bandwidth unified memory, 128 gigabytes, low power DDR5X. You're going to need a lot of memory. Of course, this is not just Micron. SK Hynix is the leader by far. And then you also have Samsung, but Samsung has some internal issues. So Micron definitely is going to benefit in the years to come. Nvidia also announced that Micron will be the memory provider for Blackwell. And when talking about the Blackwell chip, it will pop up on the screen. You can see G7 memory. And as we've seen before, G7 memory, that's from Micron, since they've talked about it. G5, G6, G6X, that's all Micron and NVIDIA. And so if we look at Micron's vision and portfolio roadmap, we can see that in 26 to 27, we should be expecting HBM4. This will be HBM4 and HBM4E will be probably for NVIDIA's Rubin R100 and well, the next iteration of AMD's MI400s and maybe some others as well. Micron's president and CEO previously said that the HBM market will exhibit robust growth over the next few years. In 2028, they expect the HBM total addressable market to grow 4 times from the $16 billion level in 2024 and to exceed $100 billion by 2030. Their TAM forecast for HBM in 2030 would be bigger than the size of the entire DRAM industry, including HBM, in calendar 2024. So yeah, although they might not be the biggest player in that market, but if that market continues to grow so rapidly and it's expected to reach $100 billion, again, these are just their own projections, but still, if they can take a significant chunk of that, the previous cycles that we've seen with some memory players are going to look like, well, small hills compared to the huge mountains that will be created thanks to the huge increase in revenue. That's what I've been saying in the past, and that's basically also why, well, besides the fact that the stock got hit quite a lot, it's because, well, I do believe that the next cycle is going to be a super cycle. It's going to be much bigger and going to take much longer than the other ones. Of course, with cycles, there's always going to be a down cycle. When that will happen, I don't know, but I think we still have a couple of years left on the way up. So that's Micron. Right now, quickly looking at the stock, we did go above the 200-day moving average, but we did not finish the week above it. We went back under. We're now above the 50-day one, which sits at 97.5, and the 200-day one, which sits at 93.6. The 200-day one sits at $101. RSI is quite neutral. There's definitely a little bit of momentum. There is also, of course, a gap here. Can it be filled? Maybe. And so for me with Micron, it's pretty simple. If we continue to see weakness in the stock, if it stays under $100, I will just keep accumulating more shares. Moving on to company numero 2, and that's Uber. Yeah, Uber is also a newer position in my portfolio because the stock did get hit. As you can see, it did get hit in the last couple of months. Fears of autonomous vehicles completely ruining Uber's business tomorrow. And well, I don't think that's going to happen anytime soon. And even if that happens, I think Uber will still remain a big player. Anyways, right now, Uber has a market cap of $138.9 billion and a forward PE of 20.3 times. If you look at what the analysts are expecting this company to do in the next coming fiscal years, sales growth of around 16% year over year on average, EPS growing fiscal year much quicker than that, 54%, followed by 12% in fiscal 2025, and then a reacceleration in growth in fiscal 2026, growing 27.73%. The current average Avernis price target sits 35.7% higher than the price we're at today. And looking at what the company is expected to report in the upcoming quarter, which they should be releasing the next 3 weeks, sales growth of 5.35% quarter over quarter, EBITDA growing 9.2%, EBIT growing 10.5%, and EPS on a GAAP basis, that's supposed to be down 60.13%, and on a non-GAAP 53.3%. That's a good question. I don't know why this is going to happen. Maybe because of a one-time thing. I don't remember, but I guess we'll find out when that report comes out. Looking at some pricing metrics, forward PE, EV to EBITDA, price to sales, price to free cash flow, all under the 5-year mean or in some cases 3-year mean. Price earnings to growth sits at 0.49. And here with Uber, we get the same thing, huge growth in free cash flow for fiscal year 2024. In fiscal year 2025, free cash flow is expected to grow another 18.8%, followed by 28.7% year-over-year growth in fiscal 2026, closing in on $10 billion of free cash flow. More recently, we've got this announcement: Uber teams up with NVIDIA to accelerate autonomous mobility. Uber and NVIDIA announced that they are collaborating on new solutions to support the development of AI-powered autonomous driving technology. Generative AI will power the future of mobility, requiring both rich data and very powerful compute. By working with NVIDIA, we are confident that we can help supercharge the timeline for safe and scalable autonomous driving solutions for the industry. Millions of trips occur every day on Uber, representing a vast and rich source of data that the companies will look to pair with NVIDIA's Cosmos platform and NVIDIA's DGX Cloud to help AV partners build stronger AI models even more efficiently. I mean, okay, this makes sense, but there is also that question of what data are they actually collecting? I know with NVIDIA, it's a lot of simulations, simulated data, so not always real world data. So I would like to get more information on that. But hey, this again shows that Uber is not standing still. Although, yeah, okay, this makes for a very good headline, but I still want my answers to the questions I'm asking. We've also had some other news here for the Americans that do fly a lot. Delta Airlines will link its frequent flyer program SkyMiles with Uber this spring, as the airline will end its existing partnership with Lyft in April. Under the new partnership, SkyMiles members can earn 1 mile per dollar spent on Uber Eats orders, 1 mile per dollar spent on UberX airport rides, 2 miles per dollar spent on premium Uber rides, and 3 miles per dollar spent on Uber Reserve trips. And since 15% of all Uber ride bookings either begin or end at an airport, we know Uber customers will be racking up miles with Delta at the tap of a button. I mean, this is quite impressive, to be honest, that 15% of all Uber ride bookings either begin or end at the airport. And this is, I think, also some valuable data that Uber is collecting, not just for the airports, but they probably know exactly how many cars are going to a specific stadium, to a specific store, etc., etc. Variable data, especially when you do the Uber advertising. One last thing here, and that's with regards to Uber and Waymo, the partnership that they're having. So we go back to a conversation that they had when talking about fleet operators. So they think they're going to prove and deepen the partnership with Waymo by proving their ability to run the fleet operations at a great level of efficiency and also drive utilization of the vehicles at scale, which is critical to get positive unit economics. We've talked about the recent announcement that Waymo is going to launch in Miami through Move. And well, when this was announced, we've got some questions about, oh, why Move and not Uber? But Uber is a pretty big investor in Move. They said here, I spoke about those hundreds of thousands of fleet operators that we work with. Move is one of those fleet operators. They happen to be a company that we own a pretty large stake in. We have a couple of seats on the board. We use them in a number of countries and continue to work with them in expanding where they can help us add more supply to the network in the more traditional ICE and EV space. And they will be providing sort of a garage fleet operation service for Waymo in Miami. So yeah, maybe Uber might not get directly exposed to these types of things, especially not with the Waymo Miami announcement. But the other ones, yes, it's all going through the Uber app. But Uber is smart enough to have made multiple investments in multiple companies that do get direct exposure to autonomous vehicles and fleets. The CEO of Waymo also had something to say about that.
Yeah, we have a partnership, a pilot at a very small scale that we've been doing with Uber in Phoenix. And one of the things that we learned is that given the choice, consumers were choosing to take a Waymo. And this was just, the Waymo vehicles on the Uber app. What's exciting, though, about this partnership that we've announced for Austin and Atlanta is Uber's actually going to take responsibility for operating the fleet.
And I think that's what's going to happen in the future. I think Uber will operate a large fleet of autonomous vehicles. They also will have, they already have today, various investments in multiple autonomous vehicle companies. And I think it's a no-brainer that most of them, if not all of them, will also be available through the Uber app because you've got the distribution. Why wouldn't you, right? If you want to monetize a product, of course you're going to list that product on the platform that gets the most traffic. It just makes sense because if you don't do it, then your competitor will do it and your competitor will just eat your own business. This is not going to be a one player will take the whole market. That's just what I'm saying. I think Uber will stay in the middle, in the center, and will play quite an important part. That's my bet, at least. Looking at Uber stock here as well, we did try to go above the 200-day moving average. We didn't stay there. We are actually under the 50-day one, but just above the 20-day moving average. We are making higher lows, so at least there is that. RSI is neutral-ish. We've had some, let's say, solid momentum with the stock since it bottomed just under $60. And so here as well, if the market continues to give me opportunities to buy these types of stocks at a discount, then I will just continue to add and add more. So my position will increase, because eventually I do think that these stocks, these companies will prove that, look, our shares are undervalued and the business is actually doing better and better. Plus, Uber specifically also announced an accelerated share buyback program of about $1.5 billion. They said it themselves. They view the company, this stock, as undervalued. So voila. Anyways, that's all I've got for you right now. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, and I'll see you all in the next one. Bye bye.